Good evening, everybody. My name is Jerry D'Ambrosio, Senior Instructor here with VectorVest, and it's my pleasure to present tonight's special presentation. Dr. DiLiddo has always said that watch lists are one of the most powerful tools within the VectorVest program. They're a great way to keep track of potential trades, whether they be long positions or short positions. They're also very useful in helping you manage your portfolio, and believe it or not, they also assist in helping you determine what type of an investor you are. Okay, so I'm going to move us from the home page into the viewers. That's where the watch lists are located. And on the left-hand side, you have our watch list section. Now we have a lot of folders in here for you. We have some canned watch lists. If you're interested in the Dow 30, you can view the Dow Industrials. The S&P 500 watch lists, we've broken those up as well. We also have a special watch list folder. If you're interested in the NASDAQ 100 or the Russell 2000, these watch lists are in here for you as well. Now I've created a watch list already for tonight's presentation, and I just labeled it My Portfolio. Now I only have 8 stocks in here because I wanted to show you how to add stocks to a watch list. So you create a watch list. I'm going to come up to the top, click on the Add Symbols box, and just start typing in the symbols separated by commas. When you're finished, all you have to do is hit either the Enter key on your keyboard or click on Add over here on the right-hand side. So what I said earlier was, watch lists are a great way to keep track of potential stocks, right? For the purpose of this presentation, I'm going to demonstrate how you can use watch lists to help you manage your portfolio, the existing positions that you currently have. The great thing about a watch list is as soon as you add those stocks to that watch list, they're forced ranked, and the default sort is VST. Okay, VST is our master indicator. It combines the value, the safety, and the timing of the stock. So right away, you know which are the best stocks in that watch list, or in this case, in your portfolio, and which are the worst stocks in your portfolio. Now, you probably selected some of these stocks based on not only their value, right, whether the stock is undervalued or overvalued, but the other indicators, RV, RS, relative timing, VST. So, for example, AAIO is the top stock in this list. Applied Materials, it's a great company. Currently, it's got a price of $64.61. We feel it's worth $93.88. That's fantastic. It's an undervalued stock. It's trading at a discount from where we feel it's currently worth. The next indicator is relative value. So this is the upside potential, the long-term price appreciation potential over the next 1 to 3 years. That's very favorable as well. Excellent, in fact, on a 0 to 2 scale. It's at 1.58. It's a relatively safe stock. It's got a relative safety rating, or its risk indicator. It's above 1 at 1.01. And boy, is this stock rising in price currently. It's got an RT of 1.95. Now, it can't get much higher. It can go to 2, of course. But Applied Materials is really on a nice, strong uptrend. It's the highest VST stock in the list because, again, the list is sorted by VST. It's got a 1.58 VST. It's got a really high comfort index as well. Comfort index is a proprietary VectorVest indicator that really measures the stock's ability to withstand long and lengthy downturns. In other words, high CI stocks, and this is on a 0 to 2 scale as well, exhibit price growth persistence. They go up in price more than they go down. Now, those are the types of stocks that you want to purchase, right? You also have the recommendation of the stock. Applied Materials has a buy rating. If I scroll over to the right, it's got a fantastic earnings growth rate at 35%. They're earning $3.48 a share here. And you have all the other indicators, of course. If I keep scrolling over, you have dividend analysis. Now, Applied Materials doesn't pay a dividend. And just general price and volume indicators as well, along with sales and market cap information. And all the way on the right side is the industry and the sector that the stocks are in. Okay? So, again, you probably purchased some of these stocks based on some of the factors that I just went through, right? Whether it's undervalued or overvalued, whether it has good upside potential, is it a safe investment, is it going up or down in price, which is, of course, very important. Timing is everything. What's the overall VST score? Okay, and whether the stock is a buy, sell, or hold rating. I mentioned earlier that watch lists also assist in helping you determine what type of an investor you are. And you could see this watch list average down at the bottom. Okay, this is just a simple average of all the indicators and their values that we see at the top of the spreadsheet. Our average watch list price, our average portfolio price in this case, right, is $70.56. The average value is $101.76. So we're getting a nice discount here in terms of our portfolio. Average price is 70, average value is 100, so our portfolio as a whole, you can consider it undervalued. These two indicators here, RV and RS, are what helps us determine what type of an investor we are. So let's just say this is my portfolio. I would be considered a prudent investor if these are the types of stocks that I buy. A prudent investor buys stocks that have both an RV above 1 and an RS above 1. Okay? They want the best of both worlds. They want that upside potential, and they're not willing to take on a ton of risk. Let's just say the RV was below 1 and the RS was above 1 in this average row here at the bottom. You would be more so of a conservative investor. Not too concerned with the upside potential, but you do need that safety. It's more about capital preservation than capital appreciation. For example, let's say that the RV was above 1 and the RS was below 1. You'd be more of an aggressive trader, or looking to buy more aggressive types of stocks that have the ability to move up and down in price quickly. So an aggressive trader does want that upside potential, but they're not interested in safety, right? They want the stocks to move up and down in price quickly, and that's how they profit from those quick and explosive moves. High relative safety stocks, you're not going to generally get big explosive moves. You're going to get steady Eddie type of consistency. Okay, let's say the RV and the RS were below 1, both below 1. You would be more of a speculative type trader, not concerned about fundamentals whatsoever. And by the way, RV and RS are both fundamental indicators. So if they were both below 1, you'd be more of a speculative type trader, not concerned with fundamentals whatsoever. And by the way, if I go up to the top, click on Views, open up our Views Manager, go to the Special Reports, we actually have a special report in here. I believe it's down near the bottom. Yep, Strategic Investment Matrix. It lays out what I just went through. Our little matrix here of basically your risk and reward profile for each investor temperament. Prudent investors, aggressive investors. So I would suggest to read this. It really compares the RVs and the RSs of the stocks to help you understand yourself as the individual trader or investor. Okay? But this is my portfolio, okay? And I'm more of a prudent investor, and that's based on the RV and RS ratings. Okay, and you can see that average at the bottom. What you can also do is right-click on that average row and view the watch list average graph. Look at that. That's beautiful, right? Over the last year, here's the average price. You can consider this your equity curve of your portfolio if you've held all of these stocks for the last year. Look at the average RT. Relative timing has practically been above 1 for the majority of the year. We're looking at about 10 months or so. Price of the portfolio has remained above its 40-day moving average for most of the year as well. So it looks great. You can view the watch list average. Again, looks very similar to what your portfolio equity curve would look like. So it's time now to heal the portfolio. It's very rare that every single one of your stocks will have buy ratings and every single one of your stocks will have RTs above 1 and make you money. That's great. That's an ideal situation, of course, but realistically, we're going to have some losing trades in our portfolio. So you based your trading decisions, your selections on, again, value, relative safety, and VST, right? Well, what do you think now is the most important indicator for you to concentrate on now that you own these stocks? Well, what do you want to know? Well, you want to know if these stocks are making you money or losing you money. Are they in uptrends or are they in downtrends? Well, fortunate enough, we have an indicator that gives us that information, and that's RT. So you add stocks from your portfolio to a watch list and just simply click on the RT indicator. Okay, that sorts the list. That re-ranks your portfolio here by relative timing. The stocks at the top of the list, you don't have to worry so much about, right? Applied Materials, Momo, JD.com, they have very high relative timing ratings. The ones at the bottom of the list, that's where your work is needed. And specifically the stocks that have RTs below 1. Okay, so we have 6 stocks that have an RT above 1. We have 4 stocks with an RT below 1. And I'm just going to focus on the stocks at the bottom of this list with an RT below 1. Now let's take a look at Big Lots. $47.75 price, $73.30 value. So that's good. That's a good start to your analysis, right? Company is undervalued. Excellent upside potential, 1.45 RV. Good safety rating, 1.02 relative safety, but it's falling in price. Let me right click and just auto fit. Alaska Air, also undervalued. Very good fundamentals, but also has a low RT below 1 at 0.89. Synchrony, PCM, same situation. Undervalued, pretty good fundamentals, although Synchrony has an RS below 1. So if this is a stock in your portfolio and you now know that you're more of a prudent investor, this is more of an aggressive type of a stock. Remember, RV above 1, RS below 1 really puts this stock into more of the aggressive category. So you really want to start working from the bottom of the list and weed the garden, so to speak. Get rid of the losers, get rid of the stocks that may be weighing your portfolio down. So let me highlight the bottom 4 stocks there with an RT less than 1. Notice 2 of them, Synchrony and PCM, have sell ratings as well. So I'm going to right click on them and I'm going to view the stock graph. All right, Big Lots. Pretty volatile price patterns, right? Now this you would also consider almost more of an aggressive type stock. Very violent up and down swings. Might not fit the prudent investor type of a stock in terms of consistency, predictability, safety really, okay? I'm going to put the recommendation of the stock on. So a couple of tips here to help you manage your portfolio. Number 1, if you see the price of the stock cross below the 40-day moving average, that's this purple line running through price. Price of the stock crosses below the 40-day moving average, that should serve as a warning sign. That, along with the relative timing of the stock crossing below 1, should really start to get your attention. It's not a bad idea to sell any stock in your portfolio when the RT crosses below 1. That's indicating that the stock is in a downtrend. You could see it happen back here at the end of August of last year. RT crossed below 1 at the end of August. Price crossed below the 40-day moving average as well. And boy, would that have been a great time to get out of that stock. Okay. Now we've gotten a few whipsaws here over the last couple of months, but on a current basis, what's happening? Price is crossing below the 40-day moving average. The stock has been mostly a hold now for the last 5 months or so. It's got a buy or 2 sprinkled in there, but it's been mostly a hold rating. Price is crossed below the 40-day moving average, and RT has just crossed below 1. Now, this is an opportunity, folks, to, in this case, maybe cut your losses, I think. Depends on where you bought it, but this is where your work is needed, and these are some really good tips to help you manage your portfolio just by simply putting them in the watch list and studying the graphs. So that's Big Lots. This is one that I would absolutely begin to move out of my portfolio and liquidate the position. I'm going to go to the next one. Alaska Air. Now, we can see back here, beginning of March, that the stock first started to break down, crossed below the 40-day moving average, which did serve as nice support here for quite some time. End of 2016, beginning of this year, 40-day moving average served as really nice support. Well, what's it doing now? It's really serving as very strong resistance. So the price of the stock went below the 40-day moving average, should serve as a warning sign. Okay? RT crosses below 1. That happened at the beginning of April. Really should start to get your attention at that point. And now, where was that? It was at $90.22. Well, it's about $6 lower now than it was when the RT first crossed below 1. Okay? It's all about saving money, right? Cutting your losses, taking your gains, not digging yourself too deep into a hole. And again, these tips I think will help you moving forward. Now, it didn't get a sell rating until April 27th at about $85. So you don't have to wait till it gets a sell rating. I think following this RT and start to cut positions loose when that RT crosses below 1. So that would have been a good opportunity back here, again, the beginning of April, to do that. Here's Synchrony. Okay, another example. Stock was moving sideways there for most of the beginning of this year. Did cross below and above the 40-day moving average. But look at this. As the stock was moving sideways, right, non-directional, what was happening to RT? RT was breaking down quite a bit. That tells me that yes, the RT was above 1, but the trend of the stock, the short-term trend, was surely weakening, and you can see it eventually broke down enough where then it stayed below the 40-day moving average, okay? Served as, again, still serving as strong resistance. RT crossed below 1. Stock got a sell rating back here at 33.02. It's now at $26.25. So back then would have been a great opportunity to cut this position loose. And we'll look at one more. Last stock on the list was PCMI, Retail Computer Company. Great stock for a long time here. Higher highs and higher lows. Just recently broke down. Unfortunately, there's not much you can do when a stock gaps as much as it did. But nevertheless, what happened? The stock gapped down, closed below the 40-day moving average. RT crossed from above 1 to below 1 on that day, and that was at $25.20. Worst case scenario, you wait another day, stock gets a sell rating at $24.35. Now it's $19, so that's about 20% lower now on a current basis than where it was when it first got a sell rating. So these are just a couple of really good tips to follow, folks, to help you manage your portfolio. And again, you can do that right from a watch list. All you need to do is add your stocks to that watch list, sort by relative timing, and work your way from the bottom up. Favor the stocks that have an RT less than 1, sell ratings, look at the graphs, and see if some of those factors that I just went through are met. Prices cross below the 40-day moving average. Stocks RT, well, we know the stocks RT cross below 1. And if the stock has a sell rating, you might want to think about cutting it loose. The ones at the top of the list, they're making you money. And I'll just show you. I'm going to highlight all the stocks at the top. View the graph. Not much you have to worry about AAOI at the moment, right? Momo is just broken out. Okay, still above its 40-day moving average. JD.com is a beast, still above its 40-day moving average. LRCX, same thing, still above its 40-day moving average. Applied Materials. Now, FedEx is one that you may want to keep an eye on here. It's starting to break down. It's currently below its 40-day moving average. The 40-day MA is starting to slope downward. Okay, might be serving as some resistance as well. Now, the RT hasn't quite crossed below 1 yet, but it might be moving in that direction. So, sure, you can watch this list every day to see if any of these RT numbers fall below 1. But we live in an automated world now, okay? We're trying to move away from doing things manually and having more of an automated system to help us manage our positions. So let me first do this. Let me get rid of the bottom stocks in this list. Watch what it does, too, to the overall health of our portfolio. The average RT is 1.22. Okay, so our portfolio is in an uptrend. But if I get rid of some of these losers, look at what that does to the average RT. Brings it up to 1.53. Okay, now once you start to weed the garden, get rid of the losers in your portfolio, you can go ahead and replace them. There's a contingency to that, though. As long as the market is rising, you can go ahead and replace any stock that you sell. Where do we know, or where can we go to figure out or find out if the market is rising or not? Well, you go right to the home page. Right now, we could see that the major indices are mixed, but the VVC is down, the primary wave is down, and we are saying not to buy stocks at this time. So what you're doing when you're managing your watch list this way and getting rid of some of your losers is you're naturally letting your portfolio extinguish. And that extinguish process really occurs in a downtrend. You're not replacing. You're just keeping your winners, you're getting rid of your losers, and you're allowing your stops to take you out as the market's falling. What you can do from here, and this is the last thing that I'm going to show you, is you can move these stocks from a watch list to a quickfolio to automate that process. So let me highlight the top stocks here. I'm going to right click and I'm going to select quickfolio. I'm just going to call this my stocks. Okay. You can put however much money in that portfolio as you'd like. Commission type, I'm going to keep it $4.95 per trade. I'm not going to use margin. And the purchase type is going to be long. Okay, these are bullish positions, so I want to make sure that the portfolio is tracking them accordingly. I'm going to click on OK, and let's open the portfolio now. Now that created this quickfolio from the moment I selected OK. All we're down is basically commission here. So notice that the RTs are still above 1. They have buy ratings with 1 hold at the bottom, FedEx. I'm going to come up here, click on Edit. I'm going to set automation now. I'm going to set and turn the Genius on so that it will alert me anytime a stock in my portfolio, their RT goes below 1. So if I'm going to click on Edit here, I'm going to build a custom trading system. I'm not going to use market timing for this presentation here. I'm going to go to the automation rules for the up situation. I'm not going to fill. I'm not going to fill from a search, or if you have the Derby, you can also fill from the Derby. But I do want to set stop criteria. So I'm going to set stop criteria, and I'm going to say, alert me anytime the RT goes below 1.05. Okay, I just want an alert. I want to get ready. I want to start to analyze that position more closely if that happens. You could put it at 1 if you want, a little higher than 1.05, but when it goes from above 1.05 to below 1.05, I want to be alerted so that I can, again, better manage that position and be prepared to sell it. Now, it's not going to sell it automatically. I just want the alert. I'll click on Finish. It says, what do you want the Genius to do when a position has met its stop criteria? In this case, I just want it to send me an alert. Not quite ready to sell it yet, but I want to know when it goes from above 1.5 to below 1.5. And I also want to check throughout market hours, and I want the Genius to be on. Click on Save. We're going to apply that to existing positions, and we're good to go. It's about to load, and it just did. Our stop criteria, if I scroll over to the right, you can see our stop criteria of RT less than 1.05. So I don't have to watch FedEx like a hawk anymore. It's close, right? It's got an RT of 1.07. So I don't have to view the watch list every day and see if FedEx's RT has crossed from above 1.5 to below 1.05. I've now created an automated process to help me manage each position in my portfolio. All right, folks, I hope you enjoyed tonight's presentation. We thought it was a very timely presentation. It's always good to do a nice review of watch lists and make sure you understand and are familiar with the little tips that I gave you on how to manage your positions. Remember, price crossing below the 40-day moving average, RT crossing below 1, stocks get a sell rating. Those are all nice opportunities for you to start thinking about selling positions, and then more importantly, moving those stocks over to a quickfolio and setting the automation so you don't have to watch each stock like a hawk every single night. Have a great weekend, everybody, and we'll see everybody again next week. Take care, folks.